CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Joining us now is Mridul Gupta. He's founding partner at CoinDCX. Mridul, hi, thank you so much for joining in. And what a start to the month of November. While we have seen an all-time high of almost 126,000 on Bitcoin, we've seen that 100,000 breach, even if for perhaps a few seconds, but the volatility has come back.
That's right. And, when it was at $125,000, it came to $115,000. We saw a lot of people participating in the market, and then it again tanked because Fed did not announce a rate cut. Time and again, what it keeps reminding us, Manisha, is that how the prices in the short run gets impacted by all the actions happening across the globe, be it geopolitical environment around various tensions on the cross borders, be it Fed rate cuts and how the US economy behaves, or be it anything to do on the crude oil price movement, etc. Right? So I agree, the market has been very volatile. Good time to start thinking about investing into the market,
Okay.
but at the same time taking a judicious outlook by investing small amounts recurringly versus bulk amounts in one go.
While, of course, there's a lot that's been happening crypto-specific through the year, Mridul, but how would you say, or how would you see, rather, the impact of all that's happening in sense of macro markets here? Is crypto a risk-on or a risk-off asset class? And how long before we see it happen as a mainstream asset class?
It's 100% risk-on asset class when it comes to short-term, but it's 100% risk-off asset class when it comes to long-term. So, tomorrow, if, for example, there is more chaos in the world, as a store of value, Bitcoin and other crypto asset classes will shine. But in the short run, when you see steep price movements up or down, it is completely based on the sentiment of the people, because the money is moving from the fixed income and the money market instruments to a more risk-on instruments like equities, etc. And Bitcoin does end up showing behaviors of a risk-on asset class, at least in the short run. So the fundamentals remain strong. So even if the price has moved from 125, gone to a 98, come back to a 103, the fundamentals still remain strong. The inflow of capital, the inflow of users, the inflow of different platforms building on top of crypto, and on top of it, all the regulatory developments happening, that remains strong. But it's very, very important, and thanks for asking that question. In the short run, if a person is investing into the asset class, he should think of it like equities. In the long run, if he's investing into the asset class, he should think of it like gold.
All right. I remember you telling me that it's a global investment asset class in sense of its manner. Mridul, how would you advise people investing within this? Would you say SIP is the best way to do it? And also with the kind of institutional adoption, corporate adoption, even treasuries getting into it in the global markets, how would you look at 2026 panning out for it?
Yeah, so I think the good thing about the markets is that it has room for every kind of investor. I would say that if you have not started your crypto journey yet, come and start it with a SIP product. We also have it on CoinDCX. A lot of platforms have it. It helps you make sure that you're not timing the market and you're always in profit. So we have seen a lot of people put SIP on our platform, and all of these people have been profitable over a longer run. Right? So if you're starting your journey, if you don't want to go into the technicals of the market, start with SIP. If you have evolved to a level above, and you are able to understand the dynamics of the market, you could try your luck with leverage products. If you don't like leverage, but you are deep into crypto, you could try with the newer projects coming on the blockchain and getting launched and getting traction. You could go into the fundamentals of these projects and start doing more long tail token investing. But I think different flavors for everyone. But the bulk of the people who have not yet started their crypto journey should definitely look at SIP. It's the single most useful tool on any platform to make the user profitable over a long run.
Mridul, as you mentioned that with the kind of correction that we've seen in prices, perhaps a good time to start investing within. Going forward, as we are talking about macros, if a US Fed rate cut does not happen in the month of December, and with the kind of moves that we're looking at as we get into the new year with dollar index slightly on the higher side, slight risk off in the international markets as well, how is all of this going to impact the prices?
So I would say that any risk-off sentiment does have the tendency of bringing crypto prices down, starting with Bitcoin and then moving into other tokens. I would say that a lot of it is baked into it already. We have seen 20% price correction over the last month. So a lot of it is baked in already. But if the market markets are markets, right? If the market is expecting a rate cut, but the Fed does not do a rate cut again, we will see some price correction happening again. And hence, especially in the volatile times, I urge investors to, number one, if they're trading on leverage products, reduce their leverage. Don't trade 10x, maybe trade at 3x or the 4x. Number two, don't trade in illiquid tokens. So focus more on blue chips, focus more on mid tail, but don't go towards the long tail because the price movements there can be 100% up or down. And number three, if they don't know what to do, then instead of being completely isolated from the market, jump towards a spot portfolio and start doing SIPs, because that way you are more tuned into the market. You keep understanding the fundamentals and the technicals, and you are not putting a lot of capital at risk on the trading.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.